TFNN. Headline News Update.
Okay, folks, Larry Pesavento for TFNN. What I'd like to do today is to sort of go over some of the things that we've been talking about. Now, I posted a chart here of the 10 worst stock market crashes in history. I am not predicting any crash. I am predicting a correction. It could be a severe one. The one I want to point out to you was the one I was involved in. You'll notice on August the 25th, 1987, the stock market topped with harmonic convergence. That were 5 planets coming together on that day, August the 25th, and it went down, you can see, 2 months later, on October the 19th, it was down 36%. The last day, of course, it was down 15%. What's important about this, if you notice that these cycles are usually 34 months, 36 months, 38 months, sometimes 40. But if you multiply this times 2, you don't even have to do that, folks. Just add 37 to that, and that takes you to 2024. And that's what we're looking at here, and that's what we're watching here today. There's others in here. If you watch these relationships, so absolutely unbelievable how close they are to telling you where we are. I personally think we're looking at this bottom one. I think we'll take this one out as a record before too much longer. It certainly looks that way. I'll talk about a few things. And of course, when I'm wrong, which is I'm seldom wrong, but never in doubt. But anyway, these cycles are extremely important, and they do line up very, very important to some of these things. You'll notice that all these durations of these took a great deal of time other than the one with the COVID, all right? That was the one from 2020. And then we had the crash of 87, which happened to be the greatest buying opportunity of all time because the Dow Jones retracted exactly 61% on that day, October the 19th, of the low on August the 9th. Of 1982, down 5 years, stopping exactly at the 61, and it went straight up since that, and it hasn't stopped yet, possibly, but we're going to find out as we go through here. You'll notice on the dates here, they're all in the 1900s. The reason for that is, folks, there wasn't really good data coming in from New York until after the Civil War, around the 1870s. The New York Times and also the Wall Street Journal came out in the 1900s. They started processing charts. You could see the actual bar charts and stuff like that, but nobody had any of that except the Sumerians and Babylonians that Andrew Lowe so succinctly put out many, many years ago. But that's when they really started, and of course now everything's on the tip of our tongue here looking at this stuff here. I'm going to go over some of this stuff the rest of the morning here and go over this, and we'll be right back.